Recording. All right, guys, welcome back to another episode of the Mining Store podcast. As you can see today, we've got all of our lovely faces here, the team on here to show what's up. Basically, we're going to be changing things as we go, trying to perfect this podcast. There was definitely a request from all the viewers to get our faces on here, so here we are. We're going to hand over to Mitch now, who's going to run through a bit of a basic stock market update. Hand over to you, Mitch.
Yeah, so firstly, I just want to say the screen you guys are seeing right now, this is a bit of a look into the Trading Academy and how our kind of market updates are set out and sent out to members. So it's kind of in this structure here. But yeah, you'll see that as we go on in the recording. But yeah, just a quick stock market update. So the stock market was performing quite strong kind of late last week, a bit last week. Kind of all the markets were, but we've seen a kind of taper off this week a bit more. The Dow Jones Industrial Average was struggling to stay positive. The Nasdaq saw those early gains fade away, and the S&P also kind of saw its early progress evaporate. So we kind of you kind of probably expected the pullback in BTC this morning. I think last night we saw as high as, what was it, 24.2 or thereabouts. Yeah, so we've kind of retraced to 23,800 for pretty much the majority of the day since I've got into the office. So that kind of small pullback was probably expected in line with the stock markets, as we've mentioned, that correlation coefficient. So yeah, that's kind of just a brief small update now, but as per usual, keep you guys updated on that. And yeah, Tony's just going to talk a bit now on the recession and a few details of that. So
yeah, just following on from what you've been talking about there, Mitch. So the risk assets, Bitcoin, equities, they've all benefited from a weaker US dollar. So the softening dollar has really kind of benefited the rest of the market. And if you're looking across a number of high-ranking US officials, Treasury Sec Janet Yellen, she's come out saying that this isn't an economy that's in a recession. Joe Biden said we're not going to be in a recession. You've then had Fed Chair Jay Powell saying, I don't think the US is currently in a recession. And that's, even though the US has reported two quarters, consecutive quarters of negative GDP growth, which is the official recession guidelines, but it's mainly just due to the strength of the US labor market. So when the US does enter a recession, the NBER is like the office that actually declares a recession, and they're generally very late to the party. So they won't actually officially announce a recession until you're 3 quarters in. So those words, official recession, aren't going to be coming to the forefront of the news for another couple of months, really. And you've also got obviously the midterm elections coming up. So that's why you're seeing all of these kind of high-ranking officials jawbone and kind of steer the ship away from the recession fears. So that's also probably why that the market's having a bit of a rally higher. But what we're going to go down to, if you just scroll down a fraction, Mitch, into some of these charts, we're going to dive a bit deeper into the underlying economics and why we are, assuming that we are in a recession. So, this year, you've heard a number of stories about supply chain issues, but this chart here is actually saying something different. So this is a chart of the manufacturing new orders index minus manufacturing inventories. So basically, this chart is showing there's a huge buildup in inventories in manufacturing. So every time the chart reaches that kind of -9 level, a recession has unfolded previously. So really what this chart is indicating is the consumer isn't buying goods and services. So it's not a supply chain issue. There's actually a demand issue as well. So the consumers are being squeezed due to inflation. Wages growth isn't picking up with inflation as well. So consumers can't actually afford to go out and buy goods and services in the US, which also aligns with the GDP, which is suggesting that we are in a recession as well. So, what we do know is consumers are being squeezed at the moment. So yes, the underlying kind of data is indicating a recession is there or thereabouts. There's a couple of other charts just beneath there as well, which kind of indicates that the average US sort of personal savings rate is the lowest since 2009. We saw a huge spike in the savings rate, the first and second stimulus check, the third stimulus check, and since then, money in the bank, the personal savings rate has steadily decreased, and it's now at 5.1%. So, not only is inflation very high, but people have less money to go out and buy goods and services. So this is kind of tying in with the manufacturing inventory buildups as well. And just the third chart beneath as well is also indicating that US consumer credit, so the rate at which people are going out and borrowing money, is also the highest level since 2011. So people are very stretched already with inflation going through the roof. Their savings rate is down. They're going out and borrowing more money as well. And obviously there's an inventory buildup in the manufacturing sector of the US. So there's a lot of telltale signs there is some trouble brewing underneath the surface in the US, and that we are most likely in a recession. But until unemployment really ticks higher and that filters through to companies pausing their hiring freeze, pausing hiring, maybe laying off workers, that's really when you'll see the NBER come out and say, yes, we are in a recession. So, yeah, some concerning data there at the moment. Very interesting.
Bit of a recipe for disaster almost. I mean, you've got people borrowing more, everything costing more, people digging into their savings, getting to the bottom of the barrel. So, I mean, we don't like to prey on it, but usually there's opportunities in these times as well.
Yeah, most definitely. So, during a recession, during a market downturn, that's really where some wealth can be generated if you're smart and you have some cash to deploy. We've stated this a number of times over the past couple of weeks on this podcast. So, yeah, concerning, but view it as an opportunity, I say.
For sure. Yeah, just touching a bit more just on some US economics and politics. Just lastly, they did sign the $739 billion healthcare and climate bill. This was kind of expected that it would get signed. I think it was in the works for a little bit. And it is a funny one because, it's kind of the notion that to improve healthcare and the climate and also reduce inflation, they're going to go and spend 800 billion, but we sure hope they know what they're doing by injecting that amount in the economy and kind of providing. I've read some of the subsidies that are out there. If you've got a certain hybrid car that's green efficient, you get a 40 grand subsidy and all this stuff. So we'll have to wait and see. But yeah, in doing so, it'll allocate roughly 369 billion to reducing greenhouse gas emissions and investing in renewable energy sources, which is obviously great. Obviously, Bitcoin is now going also to a lot greener energy, and we're seeing, that steadily rise. So maybe that has something to play in here with some incentives and subsidies. Who knows? Maybe the government will like Bitcoin and its green energy sometime soon. But yeah, so essentially what this does is it just shrinks tax breaks for certain profitable corporations. Oh, yeah, sorry, I should add that there's a new corporate minimum tax of 1% excise tax on stock buybacks and stricter enforcement by the IRS. So that's maybe another thing. The IRS might chase after a couple of corporations and maybe a few crypto corporations. So hopefully not. But yeah, so essentially this just does a number of things. But yeah, all else being equal, according to this chart, the impact will actually be pretty small on economic growth. So through the tax has been considered the most meaningful one since the 1990s. From a modest historical perspective, you can see here that, like, in comparison, in GDP growth, this is what's expected to happen compared to a lot of the other acts they've brought out in terms of revenue and whatnot historically. So that's the prediction, but obviously that'll have to be to wait to be seen. But yeah, here we've just got some information. It provides financial help to millions of low-income and elderly Americans and whatnot. So yeah, we'll have to see how this one plays out, given the impending CPI data release, I think, in 2 days and whatnot. So, but it's good to see they're taking active measures and whatnot with climate change as well. So, yeah, just moving on. I won't read this all out, but Chainlink, the number one kind of oracle of the entire ecosystem, set to, well, it was predicted to potentially introduce staking. So we can include this on our Chainlink info. But yeah, they're looking to introduce staking to increase, obviously, their defense against hacks and improve security. And funnily enough, Chainlink, as big as it is, has never been hacked. So not that they need to improve their security, but it's great to see that such a profound project is still taking measures to introduce new things, so this would never happen. We obviously saw this with Solana recently. They had another hack last week, I think it was, where they got exploited. it happens on Ethereum a fair bit. But yeah, we can detail more of this staking on the
It's
nodes and
interesting to
whatnot.
see Chainlink go down this route because, go back to 2017, 18, that was the time when, buzzwords were the thing and everyone's going, oh, everything's got to be decentralized. It's not
Mm,
cryptocurrency unless it's decentralized. And up until
yeah,
now, Chainlink really hasn't been that decentralized, really. Like to run one of these current
that's
nodes,
right.
you got to be approved, et
Yeah,
cetera, et cetera. So it's going to be interesting to see what this does to the project.
yeah,
In my mind, I only see positives for it for now.
yeah,
Maybe it may make it maybe less secure in some ways because there's more going on or whatsoever. But
yeah.
hopefully it does actually increase it. And yeah, great project. Obviously the best Oracle project out there. So I'm sure they know
Mm.
what they're doing.
Yeah, yeah, for sure. So yeah, I think they aim to release that later this year, and then yeah, there'll be more information released then. But yeah, just a quick one. Infamous Sam, the leader of FTX, has come out and said that Sol, is the most underrated token right now, and I think a lot of that comes back to what I just mentioned. Sol has risen from the ground very quickly in this kind of last bull run of 2021 or 2020 and 2021, I should say. Shooting into the top 10 from being relatively nothing. Um, and yeah, I think that's where the roadblocks kind of occur, is that it's so brand new and fresh, and they're constantly evolving that they don't have all the measures 100% in place to obviously not have these blocks in the way. But yeah, he kind of just talks about that here. You can read here that essentially that's what he says. He says, if any other blockchain would have tried to do what Solana's tried to achieve in the last year or 18 months, the exact same thing would have happened. But that's what blockchain is. It's so new, it's so infant. You need to have trial and error in certain things. There's new technology constantly evolving. So
It's
yeah,
been
it's good.
funny watching Sam kind of become such a figurehead of the space, isn't
Yeah,
it? Like someone who I think naturally when you watch him probably prefers to be, behind the screen and not so much there. But, a lot of people
yeah,
are taking his word on board. When we were
yeah,
at consensus, the amount of people waiting in that room just to hear him
yeah.
speak about, something they probably are, predicting he's going to say. But, he's obviously having a big influence there, and FTX as an exchange is certainly, pushing it up there with kind of Binance, really.
Yeah, yeah. And then just the last thing on kind of just recent news coming out this morning is that the US Treasury sanctions Tornado Cash. I'm sure a lot of you know what Tornado Cash is, but for those that don't, it's essentially just a way to kind of swindle your money without having a trace. So, a lot of criminals and whatever would use Tornado. Oh, a lot of hackers, you would have seen it reading hacking articles. They've exploited the Solana for X amount of Sol or F or whatever it is, and then they've sent it to Tornado Cash and then whizzed it out the other end without a trace. So, yeah, essentially they're just being, they're being investigated for a number of things. I think, yeah, their CEO or their founders I already saw on GitHub they suspended his account. So there's obviously going to be a lot to play out here. But a lot of the hacks that you guys would have read in the media and whatnot would have been using Tornado Cash to kind of get rid of that trace. But
Surprised they've got away with it for so long. To be honest, yeah,
yeah,
that's
it is
interesting.
quite.
I'm like, what else would you use it for?
Yeah, it's interesting because
I mean,
it's not, they're not
it's a hard.
necessarily doing anything wrong in a sense. They're just providing the platform for
Yeah,
people to do
exactly.
the wrong thing. But
You can
Plausibility.
kind of make the same argument for, a lot of the privacy coins out there. I remember when we were heavily invested in Oxen or Loki in the time, there was a big discussion going through the community about, well, what do people really want security for, or what do people need privacy for? And it's like it is a right at the end of the day. I mean, you can understand this, the name in itself, Tornado Cash, or whatever, it sounds like you're doing something dodgy. But you can kind of see where in a certain place, some people want to be able to hide their, they don't want people to exactly see how much money they have in their bank account if they're a big corporation, etc.,
yeah,
etc. So
Yeah.
yeah. So I think essentially this is just arisen from their inability to kind of put in effective controls to prevent criminals and whatnot. Maybe it's a KYC thing, but then again that kind of defeats the purpose of privacy, doesn't it? So it'll be an interesting thing to play out. But
We see it as a good thing that they've stepped in.
I mean, yes and no.
I mean, from the side of stopping hackers, yes.
Hmm,
It stops the ability for them to exit the funds out and for
yeah,
projects to now projects can't step in if they get rid of these, and
Yeah.
they can actually step in and lock off wallets or blacklist wallets, or it makes things more traceable. So from that side, I'd say yes. But obviously the downside is I'm sure it probably attracts volume of buying, and from a trader's perspective can slow things
Yeah.
like that down.
True.
Yep, for sure. And then just before we go on to anything technical, there's just these usual general fundamental points that I provide. I think these are from yesterday afternoon, but I think the most important one to note that we will kind of expand on later when we show you a chart from Glassnode is that 65% of the Bitcoin circulating supply hasn't moved in a year, which is always a good thing, in a bear market particularly. And then so there's just a couple of other things here that you guys can read. But
I love the
before
El
we
Salvador one. Tourism is increased because of
Yeah.
Bitcoin and surf.
yeah, well that sounds like a lovely time, doesn't it? Some beautiful surf with a pocket, well, a ledger full of Bitcoin. But
I like it.
Mitch's next holiday.
yeah. Yeah. Now, actually, before we moved on to any charts, Taylor, you said that a couple of our watchers had questions.
Yeah, so a few, I guess, probably spread across in the sense that I sort of tried to pick two just because I felt like last week we went on a little bit longer than normal. But from one of my mates, actually Sam, who's a new listener to the podcast, he sort of wanted to reach out in a sense and ask what sector within the crypto space over the next sort of year and a half do we see being the most progressive? Whether that's metaverse or DeFi, play to earn, anything like that. What do we think the next sort of play is going to be?
I definitely think if it's coming from an NFT perspective, I'm seeing more and more play to earn games pop up. And that kind of couples in together with the gaming industry and NFTs. For those gamers that watch, it's pretty insinuated what NFTs could bring. You've got in-game items, in say Counter-Strike, that's an example. If you've got a skin that's really rare, that could be NFT'd rather than just and then because these games have their marketplaces, but if you could, NFT skins and then sell it on OpenSea or something like that, or even just in-game trading, stuff like that. I think that's a big thing to come. In terms of the metaverse, it's there. I think it hasn't taken off quite what people thought it would. And a really simple way to point that out is Meta, Facebook. They brought out their own coin. They said the metaverse is going to be everything. Mark Zuckerberg did that whole video. And it just really, to me, hasn't picked up from what people expected. I mean, you can't write it off because the future definitely has the metaverse in it. So how quickly that comes, I think people are kind of overestimating it. They think, 1 to 2 years, the metaverse is everything.
On the metaverse, I struggle to understand how there's value in land that's online where there could be an infinite amount of land online. So I kind of struggle to understand how there's value there. Obviously, there's going to be some gamification.
It's a good point, but I think on the land thing, you do have those. I know what you're talking about, but coming back to the NFT point and the use cases of NFTs in the future, I do think with things like housing and land and real estate, NFTs will get used. So picture that you can enter a metaverse on your thing, tour the house, and the smart contract for an NFT can simply act as the contract between a buyer and a seller. You don't need to pay legal fees. You don't need to pay real estate agency fees. You don't need to pay these $20,000 to $50,000 fees when you're buying a house. If you can do peer-to-peer with NFTs and whatnot. Obviously, there's a lot to go until that. Another good example for smart contracts and NFTs and stuff is insurance policies as well. I think that'll be a really big thing. But yeah, there's a host of things. I do think in terms of the immediately in the next year or two, I think the gaming industry is a big one. I think that'll.
Agree. I think like you'll see the similar industries that took off in the most recent bull run have another rally. You'll have NFTs have a rally. You'll have the gaming industry have a rally. DeFi will have another rally. There'll be new, different smart contract, different decentralized finance things that people are, finding lucrative, and you'll have these areas pop off again. You know, it's just like you tend to find when you're in a bull market, everything's more exciting. You know, everyone
Yeah.
wants to know how exactly a project works, and they want to tell their friends about it. There still
Yeah.
is growth in the space, but you know, it's just amplified so much more when prices are rallying and the rest of it. You know, developers can make money and all of this.
Yeah.
So yeah, I think the similar industries as before, NFTs, are the ones mentioned before,
Mm.
and then obviously we'll get some new creation as well.
I think
Yeah.
it'll come down to who market its best as well. You know, I
Correct.
think
Yeah.
the adoption is going to play a massive part of the next run.
Yeah.
Sort of said to him that I think the gaming thing is a big one. You know, there seems to be lots of traction coming out on it, whether it's, you know, GDA or COD or anything like that, all trying to incorporate it. You know, those massive market
That's the
budget.
one that strikes me the most. Like I can just
Yeah.
see in this next run, you know, people since the pandemic love being online on their computer competitive. I mean, it's existed for
Yeah.
time, but they
Mm.
want to show their skins off. They want to show this off, and that incorporation of gaming, NFT, and this metaverse, I think
Mm.
will be the space to watch.
Yeah.
Yeah, exactly.
For sure.
I got another one. It's from a mining client, Adam. His sort of question came from, I guess, over the past 12 months, obviously the expansion of technology with mining. And he sort of wants to know, where do we see the line with new mining machines? You know, where do we see, you know, terahashes versus power consumption? Is there sort of any boundary to that?
Yeah, it's a good question. I mean, the best way to look at it is to historically look at data and look at the, you know, technology progression that has happened in the past. You know, back in 2011 to 13, we probably had 20 to 30 terahash miners. You know, Bitcoin mining wasn't even really that popular. You know, come more into the 2018s, we're starting to get 40 to 60. 2018 to 19 starting to get 100. So it tends to be increasing every 2 or 3 years by that like 30 to 60 terahashes.
Yeah.
But it's definitely slowing down now. You know, like there was a big jump recently from the 110 to now we can go 198. There might even be a 250 model.
Yeah.
But I do think we're like with that, we're getting much bigger power consumption. You know, we've gone from 3,300 watts to 5,500 watts. So are we really getting that more terahash, or are we just kind of increasing the size of the machine? It's a little bit more the latter. Yes, they are more efficient, but it's not the same as, you know, sticking to 3,300 watt miner and getting an extra 100 terahashes.
Yeah.
So, like in all honesty, if you look at what most households or, you know, what kind of plug can fit in there, like most can't really take 6,000 watts, you know what I mean, or
Yeah.
10,000 watts. So they're kind of getting limited in terms of just pushing out a more powerful machine. The efficiency, you know, is coming to its end. So yeah,
Yeah.
I don't see it jumping from, say, like next year we get a 500 terahash miner and it's still using 5,000 watts. You know, that's just
Yeah.
not how I see it happening.
Yeah, exactly. Yeah. Cool.
Cool.
Anyone else
Alrighty.
have more questions? Just email them in as well.
Yeah, for sure.
Perfect. Email any of us. Moving on. We won't show too much technical analysis today. I'll just check if this is up on. Is that up? That's up.
Mhm.
Yep.
Cool. So we're just on here. We've got the Bitcoin chart just on the daily, and we wanted to kind of bring back up this Wyckoff accumulation from July 2021, which is this here is actually just this price action here. And we've kind of pasted it across to here to kind of show what, if we are in a Wyckoff accumulation, what could happen. And it does present the notion that if you see this price action here, we ranged for what, 75 days or so, give or take. We're currently ranging here about 60 days, so 10 days. I just want to point out here, so we wicked really low off a really steep kind of drop off and downturn, and we retested the low, we ranged again, we fell, we retested the low before we shot off. We paste that across here. It's not identical price action, it is a ranging, but you know, potentially we could see, we kind of reiterate this in our DCA strategies, that before we see a large move upwards, we believe there will be a small move downwards. And that kind of is what happens here. So we've ranged, we made a low with this wick here, but we're yet to kind of retest that. I think people are falling into the trap that thinking this movement is quite bullish, but it's not really. If you take a look at the volume, you take a look at MACD, a number of indicators, like we really are just ranging at the moment. Particularly when we reach these kind of areas, there's not huge volume that suggests that we're just about to fly or anything else. So with this Wyckoff, we do believe that something like this could probably happen, where we steeply, you know, over maybe a week or two, retest that low here of 17.5K before we see that large move upwards. And this is exactly why we've kind of put out those buy orders on specific alts. And we've had that lower buy order on Bitcoin as well, because we're of the bias that we think that will get tested. And yeah, this is just another way of kind of showing it if we were in a Wyckoff accumulation. I'll just get up Ethereum now quickly.
On that note, while you do it, Mitch,
Yeah.
it's that funny, like we're in a beautiful position where you almost kind of want it to go lower, so because we want to pick up at, you know, these DCAs that we've put in, but at the same time, if it goes higher, it's like, oh well, we're still holding nice positions and things anyway. So yeah, that's the position you want to be in, right?
Yeah,
pick up 100 again. That'd be nice.
Yeah, and it's exactly why there is that notion of dollar cost averaging, because you're already in the market. You're just wanting to scoop lower prices if they come. Exactly. And that's also to say, like, you know, if we retest say 21K, 20K, 19K, and not 17, well, that's why we've got a couple of buy orders for those specific ones, because we may only trigger the first or second buy of those specific alts and not the third, but that's okay. That's why we've got those buy orders in place at certain levels, so we can scoop them in the case that they do. So then for the bull run in here, you know, you're getting those 5, 10x's or whatever it may be, and really handsome returns. But yeah, I'll quickly just move on to Ethereum. Oh, sorry about that. I'll quickly exit that. On here, what do we go? We go 4-hour time frame. We showed this rising wedge kind of last week, and like kind of presented it with the notion that we could probably see this diagonal support line tested. These arrows I drew last week, I haven't removed them. They're from exactly 8 days ago. So we kind of were here, and we did test that lower support diagonal of the rising wedge and instantly shot back up. It's an interesting watch, because essentially this says that, like, if we are to reach the apex of the rising wedge, well, then we've still got some room to grow, which we still can grow. But then on the flip side, you know, as a bearish signal, if we fall out of this line of support here, it could spell some pretty ugly downside. So just
when you get a rising wedge from the lows, it can also indicate what we call a leading diagonal. So you get like a wedge, you then get a pullback, and that's the signal to go higher as well in Elliott waves. So yeah, there's two ways to look at it, either very bearish or very bullish.
Yeah, exactly. But yeah, that's just on a shorter time frame. Quickly on Ethereum, I just want to make just for kind of a longer term perspective, because at the moment I'm seeing, you know, of course, with Ethereum, it's outperformed probably everything, maybe except Polygon in the last kind of month or so, I'd say. Both have had pretty good things happen to them. But, you know, you see a lot of people, this has happened with Ethereum, which, mind you, that's not like BTC that's ranged in here. You know, it's had a very big climb, namely because of that such low that was tested. And then the merge, obviously, incoming in September 18th. So what's that, 40 days or so. But yeah, I just don't want people to get too excited here, because a good example is here in 18 during that bear market, we had a rally of almost 105%. And, you know, back then, you guys would remember, you know, people were so euphoric. They're by buying up here. So we're here and here, and people just expected it to go like that. People just expected it to go like that. And on the downside, what happened was we saw a complete retracement for about, you know, almost 1,000 days, whatever it was, which is pretty ridiculous. But yeah, that's just something to keep in mind. The exact same thing happened here early this year. Like, everyone was euphoric when BTC went from ETH went from 2,500, it went up, you know, almost 40%. Sorry, I should probably take that lower. It went from, you know, up 60%, and then what happened? We lost, you know, close to whatever it was, a lot more than that. And then the same thing here. What's that? You know, another 100%, very similar to this one here. So yeah, it's just something to keep in mind. You know, the retail investor, the average trader, just sees up when up is occurring. It's not always the case. You got to, you know, keep a stable mind about these things. But yeah, it is just something to keep in mind. These minor relief rallies that we've seen in the past have spelt pretty ugly downturns. So it's not to say it will happen, But yeah, just something to keep in mind. Just lastly, before we end things, Will, did you want to have a chat just about exchange balances?
Yeah, for sure. So I'll just scroll down a little bit more for me, Mitchell. But yeah, I mean, basically, it's something that I'll always like looking at is, what's going on, where are people putting their Bitcoin? It can kind of tell you what their intentions are. And it's been really good since the start of, the previous bull market, as we're declaring now, we're kind of in a bear market. We've still actually seen that Bitcoin on exchanges stay at lows. So it's been falling throughout the bull market, and just recently we've had actually quite a big downturn, and it's even at lower levels now. So overall, it's a positive sign. It kind of couples together nicely with the other statistic that we were talking about before, that 65% of Bitcoin in the circulating supply hasn't actually moved from its address in the past year. That kind of shows you that people see long-term value in Bitcoin. They're not looking at it as something that they want to actively trade and buy some at the very bottom and sell it at the very top. They know that it's an extremely volatile asset, but over the next 3, 4, 5, 6 years, it's going to be volatile in the direction up. That's what store of value assets tend to do. So that's kind of the notion that we follow. If you go and look at our back-end members area trades, even if you're not a member, you can go and see our previous results. You'll notice that our most profitable trades were the trades where we picked up Bitcoin and Ethereum, held them for 3 or so years, and then sold them. So nearly at the top of the market. I think some of them we sold off at about 58,000, and the top of the market was at 64, so it did pretty well. But of course, as a DCA strategy does, we're always still holding a little bit as well. So that's a positive thing to look at. That's pretty much all I have to say on the exchange balances.
Yeah, cool. Awesome. Alrighty. Well, I think that's it for today. We did have a bit less technical stuff because we noticed that it was just showing a bit too long. We probably had too much short-term, higher time frame stuff in on Bitcoin and stuff. But the picture is the long-term game, so we'll try and just include mostly that stuff from here and a little bit of high time frame stuff here and there. But yeah, I think that concludes today's episode. Anyone got anything else?
No, it's good.
No,
Awesome. Alrighty. Well, we'll continue to update members throughout this week on any price action or any important investments and trades. And for those listeners that aren't with us yet, we'll catch you next Monday.
Take care, guys.
Thanks,
Yeah.
mate. See you later.
Perfect. Nice, lads. All right,
Nice.
I'll leave it to
Nice
you now.
one.
Nice one.
Nice.
Bye.